Welcome back to another stock review. Today we will be looking one of the stocks again from Russell 2000, Mara. Welcome back everyone. And right now at chart over here we have yet another two Russell 2000 stocks, the Mara, and look at this. This movement is pretty much similar to none of the other our Bitcoin. So yes, you can kindly suggest that this company is actually quite close or related to Bitcoin or cryptocurrency stuffs. And today we will be looking at their fundamentals, their financial fundamentals, what they do, their stream of incomes, and their economic moats. And right now over here, the movements of the charts right now is pretty consolidations, and particularly I don't really like these stocks right now because technically speaking, it has a very huge double top. Look at that. Recent pressure coming in, maybe going down slightly further. And it was supported by the recent quarters of net income, which is hugely in terms of negative, while the previous quarter is in positive finally. But then, yeah, the latest quarter is actually in negative form. Just from here in short terms, it's quite bearish right now, but overall I don't really like to trade this stock. Let's look at the bigger picture. So right now we are at the revenue for the Marathon Digital Holdings, Samara Marathon Digital Holdings. So over here we can observe a pretty cool value, which is a very continuous increasing and showing signs of exponentials when it comes to their quarterly revenues over here. So you can see the recent quarters is actually at their all-time highs already, so it's pretty decent. Whereas for the net income of the Mara, the results somewhat kind of like opposites already. We have this quarterly net income of the recent high is actually last of the previous quarters. From the sign over here, you can actually see it's actually moving up, but then the uncertainties of the net income, whether or not it's not predictable, because if I know this company will keep on growing for the next few months, few quarters, few years, and the overall results from the history is actually creating all-time highs, keep constantly creating new highs of net income, that will be something that I prefer to buy. But then right now over here, the stability and the predictability of this net income is not so strong. And for the free cash flow of Mara, we have negative free cash flow over the years, and it's starting to get more and more negative free cash flow. So it's something that I don't really like, especially when it comes to hiking of rates, right? So high rates, this kind of company, they need to borrow a lot of money because they have negative free cash flow, and they will suffer a lot if increase of rates is coming. And we also have the Marathon Digitals on the R&D expenses, and definitely the R&D has been increasing very tremendously, and I think they just decided to invest in the R&D sections only for 2023, so starting 2024. So after looking at the financial fundamentals of the company, it doesn't seem like that beautiful, but what is their income, what's the source of streams, and what do they actually do, we'll be now going through the topic of that. For Marathon, is trading now at $19. And what Marathon do is they actually a public traded Bitcoin mining company. So you can somewhat relate it to Bitcoin, but not really, because they are the company that provides services in terms of mining. They have vertical integration when it comes to providing hosting facilities as well as the energy supply. So let's read through. So it operates and manages data centers packed with ASIC miners that secure the Bitcoin's network and earn Bitcoin's rewards. Yes, mentioned it has vertically integrations, which including hosting facilities, they have mining pools, and their energy infrastructures. What they actually do is to set up the facilities, the computers, and also provide mining pools. Mining pools is more like the computational resource, like the GPUs, in order for the servers or the models to go and solve certain questions of the algorithms and in order to mine Bitcoin. So the higher the pools or the larger the pools, you have better stability in terms of receiving that Bitcoins. And if you have higher pools, you have more chances of getting more coins as well. So it will actually outperforms than other companies or other individuals with smaller pools, or in other words, with smaller GPU resource as well. So that's what they do. And specifically in terms of income and then revenue streams, the first is going to be the Bitcoin mining rewards. So they actually got rewarded from receiving that Bitcoin blocks after the mining process as well. And the second one is their transaction fees, which like slipstreams or Mara pool. And the third one is going to be their market-to-market gains on digital assets. So basically, it's the capital appreciation of the Bitcoin that they earn as reward throughout the mining or throughout the premium that they receive for providing a service. So here is the summary whereby they actually gain revenue from the source of Bitcoin block rewards, their transaction fee through providing services such as the pools. They have market assets gain, which is capital appreciation of that Bitcoins, because a Bitcoin company, so it's actually pretty normal for them to hold Bitcoins as their part of their digital assets. And another one is going to be their hosting infrastructure services, which they actually profit from being third party to provide the services and GPU resource. They have energy supply, which they actually provide via renewable as well as own assets through the energy services. And they also provide AI and compute pilot services, which future income from AI interface trials using their cooling tech. So it's a company that has main focus in terms of Bitcoin mining process. So they provide the premium in terms of pool, they provide the services in terms of facilities, and they also provide energy supplies, and which is pretty much all points to a Bitcoin. However, this company right now, from the fundamentals that we just saw of financials, the company doesn't actually seems like a solid or in the pace of stable income, stable revenue, and negative free cash flow. So it's not quite good, as I do understand, because Bitcoin is more of like they say it's meme assets, but for most people, Bitcoin is actually a great asset if you really want to get rich and get wealthy. However, this is not financial advice because Bitcoin do requires research like many other assets such as properties and stocks itself. So it requires you to go into details like why there's a reason Bitcoin going up, why there's reason why Bitcoin going down. It's just one another options for you to invest in. However, do this company will face when it comes to the problem of Bitcoin mining up? Because they have this saying that hearsay, the Bitcoin will sooner or later finish mined. So meaning that there will be no more Bitcoin can be mined from the suppliers, and they can only be traded between investor or traders who hold or held Bitcoins. So until then, because they do have holdings of Bitcoin as their digital assets, so it would make sense if afterwards there will be no more supply of Bitcoins. They will have to cash in their Bitcoins and switch their business model to deal with other stuff, because they are not just focusing, they are currently focusing on Bitcoin processes and minings. However, they do have different assets which can be switched to apply to other sectors. For example, their infrastructure services and also their energy, which can be quite useful for maybe future such as the data center management or even something related that needs facilities as well as energy supplies. So this company still has what we so-called a backup plan. However, the situation right now is not very suitable because Bitcoin is just something that can be finished mining, and I do think they will sooner or later change their business model from focusing on mining Bitcoin into something else. So moving on to looking at the strength and weaknesses of this company. So the strength of Mara is that it has massive Bitcoin mining scale. As I do understand, they actually has this vertical integration starting from supplying the energy, providing the infrastructure and facilities, and also the mining pools, as well as they also collect Bitcoins themselves, which store as their digital assets. Vertical integrations, they also have strong Bitcoin holdings and financial flexibility and liquidity. Raise capital effectively via share offerings during crypto rallies. So this is true because Bitcoin right now is at their all-time highs, creating almost 120k almost. So this is where they earn their portion of money when the crypto market starts going crazy. Fifth, they also have innovation and AI expansions, which means that this company also starts to focus on AI sectors, which is the trend at the moment, whereby Nvidia, AMD, Intel company are benefit from this trend. I do think that it's actually quite good for them to have these alternatives other than just focusing on Bitcoin, because they do understand that Bitcoin sooner or later, big mining process will sooner or later end. Whether or not it will end, but then it is actually better for them to have diversified income for their company. They also have this geographic diversity. Mining operation spreads across different countries, different states, Texas, Nebraska, and UAE, and reduces regulatory and energy dependency risk tied to one region. And for the weaknesses of Mara, is yes, as I mentioned, it has high exposure to Bitcoin price, meaning that they do hold Bitcoins, they mine Bitcoins. Basically, the earnings and the revenue, the money that comes in, comes out, is all related to Bitcoin. So it's pretty dependent on the price of the Bitcoin right now. So if the crypto market right now crash, Mara would have lost almost more than half of his properties. For the operation risk, he faced downtime, delay, and outrages at hosting facilities, so dependent on hash rate efficiency. And third is going to be the dilution risk due to their continuously distributing more shares in order to raise capital, right? So this would dilute the existing shareholders, which is not bad for us buyers as shareholders as well. And they are pretty high energy dependent, despite they involve themselves in supplying the energy part. And Bitcoin mining is very energy intensive. Power cost fluctuation affects margin heavily. Others, they also have like regulatory risk, which is increasing scrutinized crypto mining of digital assets. That was back in the previous year, but right now I think that all the regulatory should be fine, because Donald Trump has just accepted Bitcoin as part of their government digital assets and so on and so forth. And lastly, it's the same thing, which is low diversification, whereby their main focus is still on Bitcoin mining activities, although they do involve themselves in other sectors such as AI, energy, and then the facilities or the hosting facilities buildings, which somewhat is just small portion as compared to their large portion of that Bitcoin mining activities. So moving on, let's continue to look at some of the ratios. And for the debt equity ratio, it's stable, staying under value of 1, which is good, signifying that it has actually low debt than their equities. For the ROE and ROIC does not feel like very good, because right now it's in a negative form. They do exist in terms of higher than 15%. However, that's just 2 years. The stability, the predictability is very low. And right now it's sitting at negative. So it's best that I don't trade this stock, and because increasing ROIC as well. And finally, we'll be looking at their net cash. So as mentioned, we have negative free cash flow that is keep on decreasing, more negative free cash flow. So it's quite normal and predictable that they have more debts than cash. So this company is something that I would avoid, because I don't like company that has a lot of debt. I prefer company that has a lot of cash, because they are more versatile and more diversified when it comes to using those cash. They don't have to worry about borrowing money with high rates as well. So overall, this is some company that I will actually avoid due to its poor business model, as it focuses more on the Bitcoin mining sites, which is not the hype right now, as AI is the new trend for the market right now. For their financial fundamentals, it's also not very decent. And one of the things that actually outstands others is actually just the revenue, with increasing in terms of exponential form. However, their net income, their free cash flow, they are in great debts with decreasing negative ROE and ROIC, which is something that I would avoid to invest in this company. However, this is not financial advice. And if you really do understand how Bitcoin companies work, how mining process works, and you do understand there is potential in this company, then that is based on your decision to make in order whether or not to invest in this company. But for me, my case, I will stay away from this company first because I do understand the business model of focusing on Bitcoin mining only is very risky and dangerous in terms of the earnings as well. So they have red earnings because of their decreasing net income. And right now, the situation, I don't think the market is actually rebounding as previously, because although we do see the Bitcoin market rallies actually at the all-time highs right now, but it doesn't seem like this company will soon go back up to their previous all-time high, which can be very difficult. So before going to the summary, we'll be looking at the economic Moat score for the MARA, brand loyalty and pricing power. So it is well known in Bitcoin mining, but commoditized commodity pricing limits ability to command price premium. So they are actually is 4 marks, which is makes sense because their product of Bitcoin is actually depends on the crypto market, and it can be fluctuating, which does not have the ability to actually price their product or so on and so forth. And for the high barriers entry is at 6 because it actually requires a lot of hardware, the knowledge to how to mine Bitcoins, as well as there is a lot of high cost in terms of energy as well. For switching costs, it's ranked at 5 score as is low for customers, pass-through costs, but moderate for large institutions to manage their mining fleets. So there are still better opportunities to find better hosting services, pool services in terms of mining process. For network effect, it's very limited as mining does not benefit from user-driven network effect because most people, they don't actually care about how mining works. They are just more care about how the product that is mined, which is Bitcoin, which is the crypto market itself. So the process of mining effects is not that high, so it's ranked at 2. As for the economic scale, the scale benefits in operation and infrastructures, but struggle in cost volatility and reliance on Bitcoin price. So the economics is actually pretty just highly dependent and reliant on the price of the Bitcoins. And if there's hype, there is bull market coming on in the crypto market, then the company will somehow gain profits from it. So it's just placing at score of 5. So overall, the final score of the Moat for MARA is average score of 4.4, which reflecting a narrow and non-existent moat. The summary is that they have weak moat structures because they just really highly dependent on the Bitcoin price swings, hardware competitions, and tight margins because of the price of the Bitcoin. Besides, they also have this very high in terms of cost for the energy supply to run the facilities during the mining process. Infrastructure helps with the vertical integration from the power supply, the hardware, the facilities, the pools offers the operational strengths, but actually not enough in terms of strong moats. They also have limited pricing and network leveragings, and because of lack of brand pricing advantage or user-driven effects. So people are more towards look at the product, such as the Bitcoin only. They don't look at how the product or the process of mining as a product because it's meaningless to them. So overall, we have looked at their financial fundamentals, what they do, their strengths and weaknesses, as well as their economic mode. So as summary for this video, it's quite short because overall, everything that we just saw, that we just observed, starts to point to a very bearish sentiment for MARA, or just telling you that this is not something that you want to hold long term unless they have in switch or they switch their model business to mainly focus on AI sectors to provide services such as data centers, cloud computing, all that stuff. But even though they start to switch to that direction, they still have a lot of other challenges. One of them is the main competitors from Meta, Google, Nvidia, and Amazon as well. So it can be a hard decision for them to take. However, for now, this is something that I would avoid. And I'm not saying that you shouldn't buy or you shouldn't sell. I'm not giving buy call or sell call. It's just that This is their fundamentals, this is the results and what they do, and based on this, my decision is not to involve in investment for this company. But if you really do understand what you're doing, you do understand the business model of how mining process works, yes, you can go for it, but that is under your risk taking and your decision to make. So there's another point for me is that this kind of company is somewhat driven by another market. So this is not considered as a market itself, because if you will look at Bitcoin, that's the main market. That is where a lot of people go. Because if you think back again, there have been 3 times rally, including the recent all-time highs rally. Bitcoin is just constantly creating higher highs and better highs. As for companies that, even though they hold some portion of that Bitcoin, their main process is to mining of Bitcoin. And you can see from the results of the Bitcoin getting all-time highs, Mara is just getting lower highs, which signifies that it is better to actually invest in Bitcoin straight away instead of just holding or invest in companies that is related to Bitcoin, which is somewhat you are trading or investing something with that is dependent on others. Well, itself, it still creates value, but then it does not benefit well from that portion, because even though it mines Bitcoin getting all-time high, it does not mean Mara is going to earn from that portion as well. In summary, this is pretty much a good company if you really like Bitcoin, but my take for me that the decision that I make is that I will stay away from this company because of its poor financial status, as well as the business model, which I don't really like, because I prefer something that, unlike Nvidia, although they focus on AI chips, which especially is the market trend right now, and I like companies that has multiple streams of income, diversified stream of income, as well, and also they have a strong growing status and mode for the past few years, 10 to 20 years already. So for this company, 10 years before, it's not something that's predictable, so I would rather stay away from. So I guess that is all for me for today's stock review. So Mara is a click. We have done Mara, and my take is that I would avoid it for investment. If you like this video, you can support me by clicking the like button, subscribe to my channel, and share it out to your friends. And if you would like me to review specific stocks, you can leave it down in the comment, and maybe we will go through it in the next video. And I think that's it. So see you on the next one.